Happy New Year. Welcome to Christensen Wealth Management. I'm Michael Christensen. Thank you for taking time out of your day to watch this stock market update and industry sector review. I hope you had a very Merry Christmas and a very Happy New Year holiday. Welcome back, and let's make the most of 2018. I appreciate you taking a few minutes out of your holiday week to watch this video, and let's jump right in with the first weekly quote for 2018 from Logan Pearsall Smith. If you don't know who Logan Pearsall Smith is, Logan was an American-born British essayist and critic. Harvard and Oxford educated. He was known for his aphorisms and epigrams. He was born in October 18th, 1865, died March 2nd, 1946. And Logan once said, "There are two things to aim at in life. First, to get what you want, and after that, to enjoy it. Only the wisest of mankind achieve the second." Wise words from Logan Pearsall Smith. So with that said, let's take a look at the Dow, S&P, and the NASDAQ and some of the select industry sector charts, and then I'll be back in a minute. Here we have a 6-month chart of the Dow Jones Industrial Average. As you can see, it's been on a pretty steady uptrend since early July. And we topped out here on December 18th, and we've gone sideways for about 2 to 3 weeks. Today we popped up just a little bit, but we're still looking really good. The 5-day average in red is above the 20-day average in blue, which is above the 50-day average in purple. So we have short and intermediate term strength for the Dow Jones Industrial Average. Here is the 6-month chart for the S&P 500. Same kind of story. We had a low here back on July 6th, and then pretty much a steady uptrend since then. 5 above the 20 and 20 above the 50. Those are the moving averages. The price of the S&P 500 is in black here. So today we popped up to a new all-time high on the S&P 500, and the 5 and the 20 and the 50-day moving averages are all pointing up, which is short and intermediate term strength. Here's the 6-month chart of the NASDAQ 100. Same story, kind of bottomed early July, been on a steady uptrend ever since. Today on July, actually this chart, on January 2nd, we had a little bit of an uptrend here, taking us just below the prior all-time high of December 18th. So kind of a big moment here for the NASDAQ. It either breaks that December 18th high, or it stops and starts to turn back down. So the next couple weeks of January will be a really good test for the NASDAQ 100. But as of now, the 5 is above the 20-day moving average, and the 20 is above the 50-day. And that's all short and intermediate term strength. Here we have the S&P 500 Telecommunications Index for the last 6 months. We bottomed out back here on November 14th, rallied up strongly, and then we've kind of gone sideways here since December 21st. So a couple weeks of sideways movement. The 5-day moving average here in red appears to be topping. So we'll see if the telecommunications start to roll over to the downside. But as of right now, the 5-day average is still above the 20, and the 20 is still above the 50-day moving average, showing short and intermediate term strength. Here's the 6-month chart of the S&P 500 Materials Index. Lots of manufacturers here, lots of chemical companies. Bottomed out back here on August 11th and been pretty strong ever since. And here on December 29th and January 2nd, 2 strong up days, breaking it up nicely, and the 5-day average is pointing strongly up, as is the 20-day and the 50-day moving average. So for materials, we have short and intermediate term strength as well. Here's the Information Technology Index, and it's gone sideways now for about almost 2 months. We topped here on November 8th, and we popped up above that today on January 2nd, but pretty much gone sideways for 2 months, and lots of indecision here on the information technology. So we are testing the prior highs. We have one high here, and one high here. So either technology breaks above this December 18th high and travels higher, or it's going to turn around and head lower. So the first half of January is going to tell a lot about the technology sector. But as of right now, the 5-day average is above the 20 and the 20 is above the 50. However, they are pretty close and they are traveling mostly sideways. So again, lots of indecision, but technically they are in a strength configuration. Here is the Consumer Staples Index. These are companies that typically make things that we need, whether it's toilet paper or laundry detergent or things like that. It has gone sideways though for about a month. Rallied up strong after Thanksgiving, topped out for a week or two, and now for about a week it's starting to fall. The price of the index has fallen below the 5-day average and the 20-day average, indicating some definite weakness there. But the 5-day average is still got a little bit of a gap here between the 20, so we still have short-term strength and a lot of distance between the 20 and the 50-day moving average, indicating intermediate term strength here for consumer staples stocks. Here are the S&P 500 industrials. These stocks have been on a pretty solid uptrend since November 15th. We had the big surge of Thanksgiving and then a little bit of a sell-off early December, but starting December 5th, we had a little bit of a Santa Claus rally here, and up it went. And here we sit at all-time highs for the S&P 500 industrial sector. The 5-day average is strongly above the 20, and both are pointing strongly upward. So lots of short and intermediate term strength here for the industrial sector. This chart is definitely unlike the others. This is the utilities stock index. And boy, has it fallen out of bed. We peaked out up here on November 14th, and then it just fell right through the floor. There is nothing pleasant about this utilities chart. The 5-day moving average is almost pointing straight down, except for the fact that we had a few days around New Year's where it flattened out. But boy, that is definitely not, there is no strength here on the short term whatsoever. And this 20-day moving average in blue is accelerating to the downside. So we have a lot of warning signs here from utilities. And the 50-day moving average has topped as well and is starting to decline. So it's going to be an interesting January for the utilities sector. Here is consumer discretionary. These are companies that make or sell things that we don't really need but want. And it bottomed out pretty much here on August 18th and then has just taken off like a rocket. We had a nice uptrend here the day before New Year's weekend, and then the first day, or I should say January 2nd, we continued this rally to the upside. Very strong. The 5-day average is pointing up, the 20-day average is up, and the 50-day average is up, and the price is above all three. So we have lots of strength from consumer discretionary in this chart. Here is the 6-month chart of the S&P 500 Financial Stock Index. As you can see, it's been in a pretty steady uptrend since September 7th. Rallied up, took a pause here the middle of November, and then right after Thanksgiving we had a Santa Claus rally and the financials shot up to December 4th, and ever since December 4th it's just gone sideways. So for a month now it's just in a consolidation pattern here. Lots of indecision, not a lot of strength, just going sideways. We'll see where we go in January, but right now that 5-day moving average in red is converging on the 20-day moving average in blue, giving some reason for a little bit of caution, because when there's no strength, sometimes the price does tend to reverse, but we'll just have to wait and see. Here's the 6-month chart of the S&P 500 Energy Stock Index, and as you can see, we kind of had a recent bottom about November 16th, and then it was just off to the races. And as of December 20th, we broke above this high from November 6th, and it just hasn't looked back. It went straight up here until December 26th, pulled back for a few days, and then on the the 2nd of January, it just took off to a new recent high. So everything is looking very strong for the energy stocks. The price in black here is above the 5. The 5 is well above the 20-day moving average, and the 20 is above the 50, and they're all pulling away from each other, so that is extremely strong for energy stocks. Here is the 6-month chart of the S&P 500 Healthcare Stock Index, and it has really done nothing since September 12th. It topped out here, went down, went back up, went back down, and we're really, if it wasn't for January 2nd, we'd still be right where we were on September 12th. So tremendous amount of indecision here and weakness in the healthcare stocks. The 5-day moving average here in red did avoid a crossover of the 20 for the moment anyway. So we'll be keeping an eye on that. And the price in black here has taken off well above the 20 and the 50. So on the 2nd of January, we had a surge of strength, but we'll just have to wait and see, because it has to get above this December 15th high and above this October 20th high for it to go any higher. So we'll just have to see what January brings to the healthcare stocks. And here is the Dow Jones Real Estate Stock Index. These are real estate investment trust companies. They own portfolios of real estate properties, and as you can see, it has not been attractive for quite a while. In fact, wow, if I zoom out, as of January 3rd here, we are currently at the same point in price as we were on February 27th, 2017. So 11 months have gone by, and it's still sitting right there at the same point. And the 5-day moving average here in red is below the 20, and the 20 is below the 50, indicating short and intermediate term weakness. So we'll just have to wait and see what happens to real estate in 2018. But as of right now, caution is warranted, it looks like. Thanks again for watching this stock market update and industry sector review. Again, Happy New Year. I wish you all the best in 2018. We finished 2017 with a lot of strength, only a few mixed signals there, but I hope those charts were useful to you. I'll be back in a week to give you another update, but before you go, please subscribe to this YouTube channel and click the little bell next to that subscribe icon so that you'll be notified whenever I post additional videos. And as I've said in the past, if you use Facebook, LinkedIn, or Twitter, please look up Christensen Wealth Management and like or follow those pages as well. I have the ability to post to those about daily, whereas I only do these videos about weekly. With that said, I'll let you go. Have a great day, and I look forward to talking to you in a few days. Bye-bye.